Good morning to everyone. Tuesday today, January 13, and our focus is the USDJPY. I'm showing you the monthly chart, which is currently breaking out towards the 160 psychological uh, handle. This move it's happening just hours before the US CPI report is out, which makes this setup quite critical. But what's really fascinating today is why the yen is collapsing. It's not just dollar strength. In fact, the dollar is facing its own crisis. The real story is divergence. We're not just talking about, okay, the RSI here. It's not just about that always. Political chaos in Japan is overpowering dollar weakness. So let's break down the drivers and map the key levels you need to watch because above 169.90, 162, which we might be heading towards in the next few days or weeks, it's a new record high. And I will also explain why I'm out on the monthly chart. But first, let's just say that USDJPY, it's like one, two, three, four, the fifth month in acceleration now. Okay. And we are also forming a double top currently. Actually, this was where we are at the last January's high. Okay. Above this, we have clear air. So it was not just 160, but also the major cycle high at 162 from July, yes, correctly, 2024. Technically, the RSI is also quite low at 61 also on the monthly. On the weekly, we are at oversold or near, overbought, but near overbought. But look, that's not the first time it's happening. And this tells us still there is room for the bet to run if the catalysts persist. Okay, here is where you need to pay attention. Okay, because the fundamentals driving this chart are not so usual. Now, in terms of the technicals, and I just want to leave you with a monthly chart, and we're going to switch on the daily. I want to tell you that this is a very long-term inverse and head and shoulders pattern, or at least looks like to be, which means we could be looking for the neckline, the distance over here, to be repeated to the upside. We could be, right? We are above the 61.8. And the next level up, or major Fibonacci resistance at least, is 176.50. And below that, the 78.6 is at 165.66. So above the 160, really, or 62, sorry, cycle high, we do have that level. Also, this is one way to look at things. Another one would be just to look at the previous high to low. Yeah. And we also go close to 176. Okay. We would add the 38.2 as well. We got the 130, and that's how it works. Because here's the thing, the reality is that when we're looking at record territories and price discovery, we really need to use the Fibonacci's quite a lot. Now, I will switch back that to the daily because we are going to come to see some price action over here in the more medium term. But before that, let me just tell you, the yen is broadly weaker today because Prime Minister Takaichi is considering dissolving the lower house, which of course increases the chances of a snap election. Markets hate uncertainty, as you know, especially when it comes to do with a safe haven, supposedly. And Takaichi's aggressive fiscal policies in general, which they are kind of called like Sanaenomics, they are scaring investors. They are causing capital to flee the yen, and that is despite the 10-year Japanese government bonds hitting a 27-year high this morning only. Normally, higher yields would support the yen, but right now, the political risk of a snap election is the dominant driver. Like a similar situation that we had with the pound and the yields last year. And that is why every dip in USDJPY is getting bought. Okay. Now, if we look at on the US dollar side, because we do, of course, look at the USDJPY here, the dollar isn't actually strong against any other currency, just against the yen. Dollar has opened the week poorly because the federal prosecutors always have opened a criminal inquiry into Fed Jerome Powell, shaking the credibility of the Fed. Usually, this would crash USDJPY, but because the yen is so much weaker due to Japan's political chaos, the pair is drifting higher anyway. It's a classic weakest link trade. Okay, traders are selling the yen faster than they are selling the dollar. So now the question is at a double top, pretty much, and ahead of the CPI report. How are we going to trade this? First of all, before we go at such a really short term, I want to tell you that the inverse header shoulders on the longer term time frame shows us upside. The medium to long term price action, which is a triangle pattern, okay, shows us upside. And in this particular case, if we take at the bottom of the last wave to the downside, we are coming closer to 159.55, which is where we could see some sort of rejection or continuation to the upside. And then off we go to record highs, 162. And when it comes to USDJPY, it can move quite fast there. Okay. So the triangle, however, opens the door to the measured move. Okay. The measured move comes from the breakout point. So we're going to look at the 173 above the previous high. This is probably over a few weeks, probably trade. But at the same time, let's not forget, if a snap election were to happen, it will probably take a few weeks. Plus, we would need for this price action to take to be sustained. Of course, we would also need for that for these rumors, for these odds to be sustained. So now back to the lower term, shorter term stuff. We've got these price action, this last range that is opening the door to 159.50 and 160.38. So I'll be looking at this level and perhaps 168.80 even. I'll be looking at these levels very closely if inflation comes hot in the US. Okay? If inflation comes hotter than expected, just a quick reminder here, core is focused to tick up 10 basis points. So if we see that being higher than that, it could trigger a breakout above 160 for the USDJPY. In this case, the political weakness in Japan and high US yields is like the perfect bullish catalyst because you've got weak yen and strong dollar. Okay, so I wouldn't be surprised if we head past 160.38. Okay. Now, over the following days, I guess, perhaps, yeah, that might be the 159.50, 160 is more of a short-term target or immediate aftermath target. Scenario 2, you get a cool CPI. CPI misses and comes in soft. Then we might see a pullback, okay? But be careful selling, because if Japan's political risk remains, okay, then support would be at 158. This is a clear support, not just because it's a previous swing high from November, but also because it's the 100 Fibonacci extension. So guys, the line in the sun for us is the 158 level. Very, very, very important for short-term price action. Because if we do lose this, yeah, we could move to lower territories. But again, with Japan's political risk being so high, then the next support will be 157.27 or so, which is likely to hold, as buyers are more likely to step back in rather than keep selling. Okay, so the game plan is simple. Watch 158 and then 159 and then 160. Very clear, pure numbers. So if we hold above the 158, the market is positioning for 160 plus. But keep your wrist tight. politics and CPI together mean volatility is probably going to be high. So let me know in the comments, are you buying the breakout to 160 or fading the political noise? Good luck, and I'll see you in the next one.